I'm Jay Taylor. I'm here backstage at the Metals Investor Forum, the May 20th Metals Investor Forum. I'm here with Steve Parsons. He's the CEO of Goldsource Mines. That's a company that I follow in my newsletter. It's been here at the Metals Investor Forum, and I would suggest that investors who are interested in this story should go to the Goldsource Mines website and view the presentation that Steve just gave us here at the Metals Investor Forum. This is intended to give you an overview of Goldsource Mines and what its prospects are. It is a company that has an advanced stage near surface gold deposit in Guyana. It's known as the Eagle Mountain project. It is extensive surface, near surface mineralization, at surface mineralization, 1.7 million ounces in various categories. And it is moving forward very rapidly with a pretty extensive exploration project going forward. So I expect those ounces will grow, and the company is also getting ready and moving towards a pre-feasibility study coming up very soon. So we're really happy to have Steve with us. Thanks for joining me, Steve, and to get investors familiar with your story. Good to have you here.
Jay, thanks for the introduction, and happy to have the opportunity to be here.
Yeah, it is a project that I think it's doesn't have splashy numbers like some of the companies that are out there these days with underground high grade projects. But what I would like people to understand, as I try to emphasize to my subscribers, is that it's not all about grade. It's about making money with what you have. And there are attributes, I believe, with the Eagle Mountain project that I think are very positive. And so I'd like you to just perhaps highlight some of the characteristics of the project that make this seemingly very attractive going forward.
Yeah, thanks, Jay, and thanks again for the introduction. So I mean, that's sort of as a management team and as a company, Goldsource has been keenly focused on projects that are executable. So of course, there's other projects with 10 gram per ton, deep underground, they might be next cycle stories. I mean, for us, what we're focused on is assets that are executable and notably, assets and projects that bring to bear tangible opportunities for phase development. And by phase development, I mean, a project where you can start with a low capital intensity, generate some cash flow through that sort of starter mine or the baseline production, which we expect in our case, and then use those cash flows to build out the larger opportunities. So essentially what we look for, and this is what Eagle Mountain brings to bear, is a project with scalability, but then also a much larger resource scale, which we actually think we've got the runway to grow that, as you mentioned. So to your point, we've got a freshly minted resource, 1.7 million ounces in the indicated and inferred categories. Where this stands out to us, and I would expect to your investors in the next sort of quarters and months ahead, as the industry gets congested and there's a focus on scalable assets and low capex intensity assets to navigate through the backdrop that we face here, is looking for companies and projects that have phase development. So what do we have as well with Eagle Mountain, and you alluded to, is it's a shallow deposit. So this 1.7 million ounces we've got is from surface down to 80 meters only, with the bulk of it from surface down to 50 meters. Okay, so very shallow, implications for a very low strip ratio there. So the grades are, the grades are good grades. I mean, there's, of course, people refer to high grades and low grades, but I prefer to say good grades and bad grades, and good grades bring to bear high margins. So we're looking for high margins with what we've got with a shallow deposit with a low strip. The second point is here, we've got on the surface part of our mineralization, we've got superficial saprolite. So it's a very weathered rock, very friable. No drilling, no blasting. You dig with an excavator, stick it to a low capex intensity mill. So favorable shallow mineralization, the saprolite. The third point, of course, is the nature of this deposit. It's sort of tabular, laterally extensive, but you can schedule the high grades early in the mine life, because essentially you just put the excavator on surface and start digging in that location, as opposed to sort of say you've got a vertical or subvertical deposit where you've got to ramp down to the high grade, or you got to pre-strip and incur a high stripping ratio early on and stockpile low grade. We're essentially looking at an opportunity with those three attributes, which really speak to the executability of this asset. Now, of course, with an asset like these and with these attributes, you want to be in a country and a jurisdiction where you can leverage that. And I mean,
Sure.
leverage is bringing it into production quickly. And Guyana is one of those jurisdictions where it's pro mining, not just from a security of title perspective, but it's pro mining in terms of the rate at which you can get permits.
Mhm.
So that's sort of critical to be able to sort of tie all the project attributes together with the country and the jurisdiction attributes.
Yeah. So when do you expect you'll be upgrading your resource? I know I don't remember what the cutoff date was, but you certainly have done quite a bit of drilling since that last resource. And then the second question is, when do you think that you will have your feasibility work completed, or when will you start, and when do you expect to have it completed?
Uh-huh. Yeah, that's right. So for us, the cutoff date for the February resource update, which was the 1.7 million ounces, the cutoff date for that was November the 6th of last year. Excuse me. And we've had sort of substantial, I'd say, drill success since that November the 6th, some of which was high grade, Jay. I mean, we talk about the good grades of Eagle Mountain, but in fact, we've had, with some infill drilling, we've had some grades from surface and saprolite. We had 34 meters true width of 20 grams per ton.
Yeah, beautiful.
Right. I mean, so this deposit does have some higher grades within it. These, of course, will be the areas where we would look to start the mine. We are looking to take some of these newer higher grade discoveries, plus some of the extensional drilling that we're doing. We're still extending Eagle Mountain to the north and to the southwest, and doing infill drilling as well. Take those new results subsequent to November 6th and bring those together in an updated resource estimate, which we'll look to deliver later this year.
Mm-hmm.
And essentially, so it'll be our second resource update in 2021. That will have, and the key there, and one of the primary objectives is to take the inferred mineralization we've got, which is about 50% of the 1.7, and upgrade that to the indicated category. So aspirationally, we've been looking to upgrade about 75%. Whether we get to 75% or not, we're looking for a meaningful proportion of the inferred to be upgraded. Take that new, larger indicated resource as the basis for pre-feasibility study. So that will be the starting point for the pre-feas analysis, and we'll look to deliver that pre-feasibility the middle of next year.
Mm-hmm.
Now we're not sort of waiting to get that resource update done to do the PFS work. So there's been a lot of metallurgical work done already. We need to do more on the fresh rock. We'll do more metallurgy there as well for Salbora, which we need to do. Of course, biodiversity work. So all the other elements of sort of project development, we are parallel tracking along with the PFS. Some of which we're doing it before the PFS starts, and some we're doing sort of later this year into next year.
So with the saprolites on top, lower costs to process, I think should be very low cost. As you mentioned, the low stripping ratio and all of that. The fresh rock below that, when do you think you'll get to the fresh rock? Will that be sometime in the distant future, or how do you see this? I know that those will be questions that will be answered once you do your feasibility work, but just wondering what your thoughts are now on that.
Mm-hmm. Yeah, I mean, we'll do some trade-off work on that. I mean, I think if a bigger company had this, I'd say like an intermediate or large intermediate had this asset, they might look to consider the development of the saprolite and the underlying fresh rock at the same time, and build out the bigger front end capex. Now, for the purpose of a company like ours, or even a company or a bigger company that were to look at this, they may also consider the phased approach, which we think, in the context of us going into a backdrop where there's a lot of companies looking to build at the same time, the phased approach is the right one, irrespective of company size, quite frankly. You can build this phase one with, call it anywhere from, we've got 490,000 ounces of saprolite so far, looking to recover the majority of that, mm-hmm. and put it in. So we could be anywhere from sort of 5 to 10 years or something of saprolite. We would look to, as I said, look to front end load the grade on the saprolite, mm-hmm. and be in the saprolite. And this is again, forward-looking statement, and we'll get definition on this next year, but call it, 4 or so years, 3 to 4 years into saprolite, and then move into the fresh rock, after a number of years, and sort of stabilizing the operation, make sure we have it running, and then move into the fresh rock, after a number of years. Um,
Sure.
and ideally, of course, pay assuming the gold price
Sure.
is right, pay for the build out of the fresh rock with cash flow.
Sure. No, it certainly makes sense. But just wondering, you have a pretty extensive exploration program going. It costs money to move the project forward. How well funded are you to carry out your program?
Yeah,
This-
great question. Of course, we just closed a financing. It was 12.65 million Canadian. We had some cash on the books already. So currently we have 14.1 million Canadian in good shape. I mean, last year we spent, as an example, we spent 5.7 million Canadian to drill 16,500 meters.
Mhm.
The plan this year for 2021 is to drill about 16,500 meters at a minimum. Of course, we have more cash now, so we can look to expand that. So, we're looking at and layering in some biodiversity and layering some engineering work. So we're funded here for 2 years. The company's not been in this position financially before, quite frankly, and certainly what this allows us to do is test these other exploration targets that we haven't been able to get to. We've had 5 discoveries in the last 2 years, and the whole eastern side of the property we've not touched. Okay, just because really the western side has provided the access with a road. The eastern side, we'd have to drive a road in there and do some soil works and such. But we've got some prospective targets on the eastern side which we'd look to get to. So combination of sort of advanced targets, infill advanced targets, and then very much reconnaissance greenfield drilling on the eastern side of the property.
Very, very good. Well, just in wrapping up here, Steve, what do you think investors should be aware of? What are the sort of share price drivers that they should be aware of and keep their eyes on them?
Yeah, I mean, of course, this is a company which unfortunately has had some tremendous results, usually off cycle, right? We had the discovery of South Bora in 2018. It was focused on exploration. So what we've got is we've had a number of new discoveries. We are looking to unlock the value in those, and they're substantial because they're high grade and shallow. And make sure in the market through activities like this, make sure the market is aware of what we currently have, but what we're looking to do with the drill program, expanding the resource, expanding the targets, and making sure there's an acute understanding that this is a project that is executable because it's shallow, and something that we can navigate through, whether it's pro-cyclically or off cycle. I mean, this is looking like it has the potential to be a high margin project, particularly in the saprolites, and we're continuing to build out the fresh rock resources as we go.
All right, very good. Well, we'll have to leave it go at that. Thank you, Steve. I think it's a story that's unrecognized by an awful lot of investors. So I thank you for sharing it. I'm certainly want to keep my subscribers up to date on Goldsource. I've been following the company for quite a few years, and I think finally we're going to start to see payday pretty soon. So thank you very much, Steve.
Jay, thank you very much. Appreciate it.